Fear is a very powerful human emotion which makes us do funny things. Like in 2019, in the middle of the COVID crisis, everyone decided to go out and buy toilet paper, causing a toilet paper shortage, and my family of 4 were down to our last 4 rolls of toilet paper, and I was getting a little bit nervous. Let's take a look at the charts and see how the charts behaved back in 2019. Here I have the S&P 500 on the daily time frame on the IC Markets MetaTrader platform, and here is where COVID happened at the end of 2019 and at the start of 2020. And you can see this market behavior is very different to the other market behavior. First of all, in terms of bar size, you can see when we're going up, the bar sizes are fairly small. However, during this short, sharp period, driven mostly by fear, the bar sizes are much longer. And the drop is much faster and sharper. So even though the S&P 500 does have a long bias, if you were to build a short only strategy, it would look very different to your long strategy, because the long strategy, the bars are much smaller. The short strategy, the bars are much bigger and they are much more volatile. Great. So can we use this information in the Forex market? Now I have the pound Japanese yen daily charts again on IC Markets, and from a quick glance I can see this chart behavior here. This is a short move, and you can see how aggressive it is. I can't seem to go back further than 2021, which is the most available data from IC Markets. So let's switch over to Strategy Quant. This is the software I will be using to download my data. This is what the software looks like, and I have opened it up in Data Manager so you can see all the different symbols that I currently have downloaded all the way back in 2003 for some symbols, and for indices I can go back to 2012, 2013, and this is 1 minute tick data set with the IC Markets broker profile. So what I did is I went into export and export to CSV, which will give me the bar open, close, high, low for all these currencies on the daily time frame, the 4-hour time frame, and the 1-hour time frame. Did you also notice within the data manager in Strategy Quant, up the top there are a list of popular brokers, and Darwinex is one of them, who are also the sponsor of today's video. Darwinex Zero is a platform that rewards good traders by giving them a simulated 100,000 account where they can use that to build their track record and attract investor capital. Because the goal here is to have a long-term track record that will attract millions and millions of dollars of investor capital. For example, the top traders on the Darwinex platform have received a total payout of 900,000 euros in the past few years. The second top trader has received 189,000 euros. I've personally been trading with Darwinex Zero since July 2023, so about a year and a half now. And in that year and a half, I've achieved 25% returns with a 10% drawdown, which has put me into the Darwinex Gold ranking. And the Darwinex Gold ranking means you can receive bigger allocations from Darwinex itself. So total up, I've received 330k in allocation, currently managing 75k in allocation, and plus the Gold ranking means you are eligible to receive investor capital as well. The cost is $43 a month for a 100k simulated account, and if you use the code Lisa, you get a further discount. Before we get into any data nerd territory, let's define some basics so we're all on the same page. A long bar is when the close is above the open, and a short bar is when the close is below the open. And the size of a bar is defined as the highest price minus the lowest price, regardless on whether it is a long bar or a short bar. Got it? Easy peasy. Next, I took those 5 million rows of data and I fed it into a program so we can do further analysis on this data. So starting off, let's look at the daily time frame only. For now, I just want to look at this year, which is currently 2024. And for a currency, I just want to pick one currency. So let's start off with the pound Japanese yen. And we can see already here, so in blue is the average bar length of all the long bars, and in orange is the bar length of all the short bars. So the average bar length of the long bars over this year is 162 pips. Whereas you can see the short bars, the average bar size is 206 pips. This is already a huge difference between the long bar size and the short bar size. What this tells us is that if we were to make a trading strategy for the pound Japanese yen that was profitable for the year 2024, then we would want to make it a different strategy for long and short, because the long bars is so much smaller than the short bars. But that was just for 2024. What if we include all data all the way back from 2003? And we can see this behavior continues. The long bars average bar size is 169 and the short bar size is 183. So the difference between longs and short remains even all the way back to 2003. And let's throw in a few more currency pairs just to gauge what it looks like from a bigger picture. Let's pick some popular ones like the pound USD and the euro USD. So we can see for the euro USD across the past 15 years of data or so, the difference isn't that big. But definitely for the pound USD, there is a difference. We've got 129 pips for longs and 132 pips for shorts. So here the difference isn't as significant as the pound Japanese yen, but it does seem to be consistent across different currency pairs where the short bars are generally bigger than the long bars. And for other currency pairs, it is actually flipped the other way, where the long bars are much longer than the short bars, because it depends on which currency is the more dominant currency. And the big question we are trying to answer today is, should you develop a different strategy for long and shorts, or should you just have the exact same strategy but reversed? From the data we've seen today, yes, even though we're trading the Forex market where we are trading one currency against another currency, fear does still play a role in these market trends, where the long behavior of a market is very different to the short behavior of a market. Now I'm going to go and hide my stash of toilet paper before people come and steal it.